Thursday here at the New York Stock Exchange, and you know what that means. The Voz and Sarge, we have a lot of catching up to do. Stephen, how are you doing today?
I'm better now, thank you.
Well, it sounds like you're doing a little better than the markets today. GDP showed the slowest growth in 2 years. The Bank of Japan left rates unchanged. What's having more of an effect today?
There's really three things having an impact right now. The central banking, obviously, the Bank of Japan put Asia into a hard spot. They put Europe into a hard spot, and our equity index futures were also in a tough spot early this morning. But we had earnings. We had solid earnings. Not just EPS beats and revenue beats, but revenue growth year over year on across many different industries. Therefore, when we saw those futures down 12 or 15 handles this morning, most of us could tell that it was probably a good spot to buy, and the market did react that way. We had a nice opening. Then you talk about the GDP, which, you know, the nerd that I am, I do go through these numbers digit by digit by digit, and pretty much top to bottom, this is a pretty poor report. There's not one spot of the economy where I could look and say, all right, at least we were okay there, because we really weren't okay anywhere.
Well, speaking of earnings, Facebook wowed us. Did we overlook anybody else?
You know, there's been a lot of opportunity here, and you've seen some movement in some of the eateries. Let's say like Chipotle moved really huge, Panera moved really huge. It's almost things where consumers are expected to go, or maybe they're not coming in right on the numbers. So you had a positive with the Panera and not such a positive with Chipotle, but then the company came out and explained themselves what, you know, the problems they have with Buffalo Wild Wings, another one. All of them very volatile, almost as if they were tech stocks. So this is where options traders are making their money right now.
And Stephen, how do we see the markets closing tomorrow?
How do we see them closing today? I mean, it's a difficult question to ask, but we've weathered a little bit of a storm here. We weathered the BOJ. We weathered the FOMC decision. We seem to have formed a base, a pretty solid base. We were up against 2095 resistance on the S&P today, and we did get through it. Will it be a pivot point this afternoon or support? I'm hoping it's support. I'd like to see us make a run today or tomorrow at that 2111 spot on the S&P, but we have the PCE price index in the morning, and we all know how important that is, so that could change the outlook.
And what do we expect for the next week? What should we be looking out for?
You know, we've been getting the regional Fed district manufacturing reports here for a couple of weeks, and 2 of them were positive, 3 of them were pretty negative. The ISM number comes out on Monday, and that's pretty much the verdict on the manufacturing sector. And then later in the week, you have jobs week. We do that whole thing again. So next week will again be an active week, and don't forget earnings, because the earnings ship will keep rolling for a couple of weeks more.
Well, we have a lot to look out for next month. It will be a new month of May. And that's the latest from Stephen Guilfoyle, one of our favorite players in the game. Thank you, Stephen.
Anytime, kid.